Hello, I'm Warren Rehn, CEO, President of Golden Minerals Company. We're a junior mining company with gold production in Mexico, and we're looking to expand our production base also in Mexico with a restart of the Velardeña operation. We're in the exploration space both in Mexico and Argentina, and moving forward to expand our footprint in the junior mining space.
Warren, good to see you again. It's been a while. You've been busy and the markets are going crazy. So I thought it's time for an update from you. So it's that time of year, quarterly results. Give us the headline numbers because I want to get into the projects proper.
Yeah, no, the quarter was quite good for us. Rodeo is operating as planned. We're ticking right along. We produced 3,000 gold ounces in the quarter, Q2. We're right on track for the annual production metrics of between 12,000 and 14,000 ounces of gold. Cost structure was a little bit higher on a per ounce basis in Q2. We were up to $1,400 per ounce produced for a couple of reasons. We can get into that detail later. But in general, we had good operating income, about just under $6 million operating income with about 1.3 net margin from the operation. So still, adding money to the balance sheet. We're spending it on the exploration side, but overall, Rodeo is still doing what it was planned to do, which is to give us a financial base with which to use to move our other projects forward.
Right. Okay. And I know we kind of do it. Most times I speak to you is just trying to understand those kind of stepping stones. Rodeo is just a stepping stone, but it also, not just in terms of cash, but in terms of saying to people, we know how to get something into production. So I think that's kind of, people have been following this well understood. Can we just kind of run through the assets in the portfolio, right? Because Rodeo is just about producing ounces, selling them, getting some cash on the table, which will help you get Velardeña into production. You said it. But you're talking now about increased costs. And obviously that payable ounce of gold is, it's being affected. Your margin is being affected. Why? What's going wrong? Or is it temporary? Is it long term?
We knew the margin was going to go down from Rodeo as we produced because the higher grade material was in the upper levels of the phase one pit. So we've completed the phase one or just about to the bottom and started phase two. And as a result, we get into some lower grade material at the bottom of phase one. And really the lower net margin from Rodeo and the higher cost per ounce is due almost entirely to the decrease in head grade to the mill. So we went from well over 3 grams per ton to mid twos between Q4 2021 and Q1 Q2 or first half of 22. So that's really what the math does, right? You produce less ounces, have a lot of fixed costs, so your cost per ounce is higher.
Right.
We will have some higher grades coming in the second half of 22, which will improve, but won't get to the same levels as we saw in 2021 in terms of cost per ounce. We're expecting about $1,200 per ounce gold produced net of silver for the year total. So it'll come back down about 10-20% from where we are right now.
Right. Okay. So you talked about I think the annual target is 12 to 14,000, right?
Yeah, in 21. Yes.
In when? 21.
In 2021, we produced just over 14,000.
Right. What's the target for this year?
Between 12 and 14, closer to the 12 side.
Right. Okay. Fine. So the grades come down, costs are going up, inflation rampant. Everyone's talking about it. So, do you think anything has changed, or do you think that you're going to end up with the amount of revenue available to you to move Velardeña forward, or are you going to have to readjust your thinking on that?
We're spending a little bit more on exploration based on success that we've had, and so that's really the variable that's most important to look at. And it is costing us a bit more to do the mine studies at Velardeña than we had initially anticipated. So the bottom line is we're spending more than we had planned to spend getting things up and running. So the margin, the cash balance that we did have before is a bit smaller, but still significant and still a useful addition, enough to get us started. And we'll just have to be looking still, as we spoke last time, on the various options to get additional financing to complete the BIOX plant for Velardeña and to get things up and running. So we're still looking at the similar strategy that we had before. Some cash on hand, a bit of debt, potentially some offtake agreement to finance, and that's still realistic and doable, in my opinion.
Okay. However, now there's a delay at Velardeña. This is the joy of mining. It comes along and crushes you every now and again. Just right, go on. So there's been a delay. Why?
Yeah. So the delay is based on our test mining. We're happy with, as we talked about before. We've increased the gold payable based on the process change through the BIOX plant, but we had to have that dilution piece figured out from the narrow vein mining to make sure we could deliver the head grade that we had in the plan. Our mine tests that we did in early this year, May, June, early July, showed that we could get the productivity we required for the plan, but at least on one particular vein, which is a fairly significant vein in the deposit, the dilution was about 25 to 30% higher than planned. And that's enough to make a significant difference when that vein is a third of the production stream. So we're looking at ways to control that. The reason for that extra dilution, is geological. Basically, there's some parallel fracturing in the diorite that hosts the San Mateo vein that allows the walls to spall off into the stoping area, and it's very difficult to control. Now, it's not, it's not like an unlimited spalling. It's just, some fracturing in the diorite. So it's not a huge problem. We're looking at ways to either do more bolting to prevent the rock from falling off, or replacing that San Mateo vein or those portions of the San Mateo vein with that characteristic with other veins in the resource. And that's possible. We just would need a bit more development to get there, and potentially a bit more drilling just to make sure we understand those other veins as well as we do the principal veins.
Right. So it's always been about the technical solution, the oxidization process, right?
Yeah.
And now it's the geology. So are you, with the technology, are you still 100% confident that you've kind of cracked that code? I don't want, or are we going back to that partially?
No, the technology is fine on the bio-oxidation. I'm not put to bed.
Okay, so this is all about the geology. And so why hold things up? Because obviously that has a knock-on effect. People might go, oh my goodness, like another major issue here. Is it just that you're trying to address the kind of recovery issue, or is it the grade issue, or is the ore more broadly concerns you? And why store things? Can you afford to?
Yeah, so the reason behind this is, we have, of the 3 or 4 major veins that we have in the mine plan right now, San Mateo, the vein with this geologic issue, is a major part. We have other veins that we can rely on to produce the feed necessary for the plan and increase the head grade without having that dilution problem. But it requires rejigging the mine plan, looking at what new development will be required to get to those faces, and perhaps doing a little bit more exploration on those veins that we hadn't completed previously because they weren't in the immediate mine plan. So it's not that we don't know anything about them, we just don't know enough about them. So there's 3 or 4 veins right there on the property that we have recognized that have the potential to replace the San Mateo piece and give us that undiluted head grade that we require for the plan going forward.
Right.
So it's not a big step back, Matthew, but it is a delay. It's going to take us 3 to 6 months to get this under control and understood before we can actually go and have that confidence in the mine plan with the new pieces in the vein puzzle, if you will, to make sure that we're going forward without any issues.
Right. Okay. Does it also give you a bit of breathing room to try and work out what's going in the marketplace with regards to inflation?
That's the other thing. Prices are low.
Yeah.
I'd love to see silver come back to where it should be in the $25, $30 per ounce range. Gold has also taken a bit of a tumble. needs to be around 2,000, in my opinion. But the macro is out of our hands, obviously. Everyone suffers from that.
Yeah, and the other thing that's out of your hand is the inflationary pressures on development companies when you're trying to put the economics together, because we've seen companies come on and blow their CapEx budgets out, 40, 50%. It's a very unusual time, but nevertheless, it's something that needs to be dealt with. Is a bit of you thinking, well, do we just hold off and sort of see when this kind of settles down again, or is it a case of we need to kind of get on with it, and whatever the price is we will have to live with it?
It's a bit of both. Frankly, we're getting the detail on the costs, so we've realized that many of the basic costs for the BIOX plant, for example, have not gone up as far as we might have thought. So we've got that detail in hand. Some things have gone up substantially. Explosives, for example, are much more expensive now than they were 6 months ago, let's say. But that we can deal with. But the biggest driver for us is the cash flow from Rodeo tails off after next year, and it would be very advantageous to the company to have Velardeña making money before that happens or shortly thereafter. So that's the reason to press ahead, irrespective of some of the other issues that we're seeing, as long as we're confident in the mine plan and that we can deliver a head grade that has the potential to be as profitable as we have it on paper in the PEA and our other internal models.
Right. Okay. So you're not going to rush ahead. You're indicating like 3 to 6 months to try and understand what it is that you're looking at there. No technical issues remain. This is strictly about trying to come up with the most efficient mine plan that you can. That's all we're dealing with here. I want to make sure I'm reading this properly.
Yeah, that's it. There is another piece that we're looking at that could benefit the head grade, and that's looking at a bit of ore sorting technology that we've looked at previously. It has the potential to help us. It's a double-edged sword. You have to mine more material to make it happen. It costs a bit more capital, but you do have the option of rejecting some of that dilutive material and recovering some of the initial head grade that you had in the plant. So that's the other side of the coin that we're looking at that may help us in the case that we don't like the situation of bringing in a couple of new veins into the mine plan completely.
Right. Okay. Those things tend to cost between, I don't know, 2 to 5 million. What do they cost?
No, they're about $1 million.
Right.
So it's just a matter of it's time more than anything, Matthew. That
okay.
We're doing the studies now. You have to figure out which characteristics you're going to sort on. We've looked at that previously. We know we can upgrade the material based on a size sort, and then we're pretty sure we can on either a color sort or a XRF type sort, and recover perhaps half of the grade that we would have lost with the dilutive procedure, which is very helpful. And that combined with substituting some other better grade and better behaving veins into the mine plan should solve those problems. And so that's what we're trying to work through right now.
Right.
And especially now that we have a new chief operating officer.
Oh, yeah. Tell me about him. Yeah.
So we hired on John Galassini. He's a very experienced mining engineer. And with good process background, good mining background. He's run huge operations in Latin America, mostly on the copper side, but also in the small vein side. He was most recently with Sabre Gold, another junior mining company, advancing their Copperstone project in Arizona. So great addition to the company. He's got a wealth of real life engineering experience in mining situations, big and small. So that really does add a huge amount of experience to our upper level management. As you know, I'm an exploration background guy who has learned quite a bit about the operation through the School of Hard Knocks. But John has gone through his entire career running successful operations, and that's going to help us a bit. It did perhaps lengthen the timeline as he got up to speed with the Velardeña operation. But I think we have a much more solid base now going forward than we would have had before.
Right.
So I'm very pleased to welcome John on.
Yeah, absolutely. Okay, Phelps Dodge. Nice. And talking of big companies, Barrick, are they going to do you a favor with El Quevar. What's happening there?
Yeah, so they completed their drill program, and we talked about that they had proposed one, and they really had some good technical success with that. I'm still waiting to see the final results from the assays, but I can say that they were encouraging, perhaps very encouraging, and I think enough to where it looks to me like they'll continue their earn-in process. They feel like they've made progress towards finding the giant gold deposit that they're looking for, which is great news for the company. That's really a nice, that is the best result from that. The second best was getting Yachtje back so we could produce it ourselves, but it's a much higher economic benefit to the company if Barrick is successful. And it looks like they're on that path now, whereas before I did not think they were. So that's good news.
No, it is good news. I'm trying to know what that means. So how much did they spend during the last 12 months? And if they do go forward, what would they have to spend to continue that earn-in?
They're about halfway through their earn-in base number, but the biggest threshold that they have is producing a pre-feasibility study with 2 million ounces gold equivalent in it. And they're really only started down that path. So they'll spend much more than the 10 million if they complete that threshold, and they have plenty of time to do so. 8 years from 2020, so till 2028,
right?
Or less. Plenty of time for them, and it will take years to complete drilling out a discovery if they have one, and it looks to me like they're heading towards that direction.
Right. Okay. So that'll be interesting, but that's a process. And the longer they stay in it, the better for you, I guess. And then to, I guess, a lesser degree, Santa Maria with Fabled, silver, gold. There's a smaller price there at the end of 2023 if they still want to acquire 100%. So is that moving forward at all? Again, small companies, difficult times. What are your thoughts?
Yeah, tough times for the small company, but they're still on track to finish the purchase. I think they're in the process of raising the capital. They have some sources of funding in Canada that look fairly solid despite the downturn in the market. So I fully expect them to complete the buyout, and then we're just carried on a royalty basis after that. If and when they go into production. Okay.
Well, I guess we'll just pay attention to that one as and when news comes through. Now, Sarita Este, good news from what I can see. Yoquivo, not so much. How are you feeling? Exploration's a tough game, right? Exploration's a tough game. So
it is. So I think when we talked last time, the high grade horseshoe at Pertinencia vein at Yoquivo was wide open to the south. We tied that off. It didn't go as far as we wished. We did have some other good drill results on some new veins. We actually found a new vein, the Camilla vein, in the Yoquivo district, and a couple of good hits on the Dollar vein a little bit further to the west. But frankly, it's been mixed up and down. It's not like a straight shot forward in building, but we will build to a resource late this year. And we'll just have to evaluate how that looks, whether it's something for us or something for someone else. So good results, but not the home run that I was looking for.
Okay.
At Yoquivo.
Right.
Yeah.
But
Sarita Este, on the other hand, is fantastic.
Right.
Looked
like it. Tell me about it. Yeah.
So it's got we published a result here. I think the headline result was just over 50 meters of 1.5 grams gold at surface, oxidized material, so it can be heap leached. And it looks to me like we're definitely rapidly building towards a reasonable resource there that would potentially be economic. So that's really great. And it's really rare that you can report that kind of an interval from surface, from 0 meters, right, down to 50. That's potentially a rock in the box for a mill or for a heap leach operation. So I'm very pleased with that. We're going to continue the exploration effort there. We have a drill that will start turning here within a week or two to carry that off. And we do control a large part of that target in the second project adjacent to that, the Desierto project, which will also be a JV with Cascadero Copper, a junior mining company out of Vancouver. So we control the entire occurrence. It's new. The discovery is fantastic. It's growing. I'm really pleased to see how it's going forward. We'll have to carry on with the drill program and see how big it gets. But no, very, very good for the company.
Right. So coming back to getting the balance of this portfolio, right, in terms of bits that you farm out or JV or people, can acquire from you, that's again a bit spiky in terms of revenue, right? So Rodeo has got some revenue, but there's a short shelf life to that thing. Velardeña, yes. You're saying next 3-6 months you kind of work out, trying to understand what it is that you've got there, and then get the relevant mining plan in place, and John's going to play a big part of that thing. When you say things like with Cerrito Este, it's 50 meters at 1.5. It's oxidized. It's obviously near surface type stuff, heap leachable. That feels like cheap gold to me.
Yes, absolutely.
Right. So you kind of got to get this balance right, because if Rodeo doesn't keep going, you got to think, well, which are the bits that we hang on to? Which are the bits that we think there's some good margin to be had, and also low capex as well, low OPEX, good margin. Just need to work out how much there is of it. You'll need to raise money for that, obviously. Maybe you don't, but I'd say there's a kind of changing, very fluid situation here with portfolio management. So, is your thinking changing, or are you thinking about contingencies? What's going on at the board?
The attractiveness of a low cost surface mineable gold deposits, and Argentina is certainly not the worst jurisdiction. It's potentially a company changer, and you're right. It would potentially change our focus quite a bit, and move us away from relying on the high cost underground mining at Velardeña to a low cost, also relatively low capital project in Argentina. So it is evolving. We have to see how it comes out. We're starting down the path. We don't have a conclusion yet with the resource size and whether it really will be, but it has that earmark to me. And when you start seeing these oxide gold deposits coming on, and that's they're really money makers, and they're rare. Most of them have already been exploited. So when you find a new one on surface in a great place, it's a really big change for the company potentially.
But what I'm sort of intrigued by is, I agree with all of that. People can have an opinion about Argentina one way or another. Some big mining companies in there, and there's other sphere to tread, right? And whatever your view is, but cash is cash, and if you feel you can move money in and out of the country, then it's fine. But something which has been complicated and feels complicated right now at Velardeña in terms of cracking that code, you're going to have some contribution from Rodeo, but you're also going to need to go out to market. I just wonder what that narrative needs to look like in terms of getting the money together for Velardeña, or do you say that could be someone else's balance sheet issue if we set it up right and we get a big chunk of change to go after some cheaper ounces in the ground? I guess all of the above's on the table, but what's your preference?
I've always thought we had the parts and pieces to put Velardeña back into production reasonably. Not that it's the lowest risk asset, but it does on paper have a great margin if you solve this dilution issue that we're looking at now, and I think we can. So I think the best of all worlds for us is get that asset back in, making money, and then either use that cash stream or sell the asset once it's shown to be profitable. There's plenty of takers for that sort of an asset, and then focus on what can be a bigger prize for the company, such as this Argentina Cerrito Este gold project. To me, that's a company maker. Velardeña is a company sustainer, perhaps, but not really the big prize that a mining company is looking for.
Yeah. Okay. Well, and I do appreciate there's kind of a whole bunch of other assets in the portfolio in Mexico and Argentina as well, which I don't necessarily want to cover off today because I'm trying to think, well, how does this company sustain its revenue? Where are the moments that revenue inputs are needed, and what are the kind of big prizes, the big kind of offload moments where you can capture revenue from selling something quickly rather than these kind of option earn and farm in type things, which take a little bit longer to digest. Have you got any? Have you got any NSRs in here as well? As in
receivables for us? We do have a few royalties out there, but they're not on projects that are currently in production.
Right.
So,
okay.
It's a future possible source of income, but not immediate.
Okay.
And you're right. Our best results are primarily putting something into production, making money that way. That's number one. Number two would be doing that and then selling the asset lump sum. Certainly cash bonus that could then allow you to go after some other prize, such as the Sarita Este gold deposit, for example, or just if the cash flow from Velardeña looks stable and relatively sufficient, like we have in the plan, then that's a really great basis to move forward on the other programs. Perhaps a little bit more slowly, but with a solid financial backing and a good project, there really isn't that much of a difficulty getting reasonable amounts of financing for an open pit type gold deposit. That would not be a big deal.